What if I told you that the greatest economic collapse of our lifetime has already begun? A silent domino effect, triggered by a housing crisis, a demographic implosion, and a global currency reset, is unfolding right now. And according to legendary investor and economist Jim Rickards, the first domino has already fallen, in China. But here's the shocking part. This isn't just China's problem. The US, Europe, and even your savings account are in the firing line. What we're about to uncover could change the way you see the next decade, forever. Today we're diving into Jim Rickards' chilling prediction of an economic collapse so severe it will reshape generations to come. We'll uncover how China's real estate bubble is collapsing, why gold could skyrocket to $15,000 an ounce, and how a war over semiconductors could ignite the next financial firestorm. And trust me, by the time we hit the 6-minute mark, you'll see why Rickards believes the next financial era will be nothing like the world we know today. Before we dive in, make sure to hit subscribe and drop a comment with your thoughts. Do you think gold will reach $15,000 per ounce in the next decade? I'll feature the most interesting takes in a future video. Jim Rickards doesn't mince words. China is in even worse shape than the US, he warns, and the warning signs are impossible to ignore. For decades, China's rapid rise was built on an unsustainable model of debt-fueled construction. Entire ghost cities were erected, not because millions of families were ready to move in, but because developers needed assets to trade, borrow against, and flip for quick profits. It was growth on paper, but hollow at its core. Companies like Evergrande, once the face of China's unstoppable growth machine, are now sinking under mountains of debt. Evergrande alone reported over $300 billion in liabilities, a ticking time bomb that finally exploded. Projects remain half-built, developers can't pay their creditors, and families who bought apartments years ago are left with nothing but empty shells. The government's solution? Pump more cash into failing developers, forcing banks to lend to companies already on life support. But buyers aren't fooled. After years of broken promises and halted construction projects, ordinary people have lost faith. Why risk their life savings on a home that may never exist? Instead, Chinese families are pulling their money out of real estate, hoarding cash, and, when possible, buying gold as a safer store of wealth. Others are moving their savings overseas, skirting China's strict capital controls in any way they can. Real estate, once seen as the ultimate ticket to wealth in China, is now viewed as a financial trap. And as Rickards warns, this is only the beginning. The real storm is demographic, and it's unlike anything the modern world has ever seen. Rickards calls this China's slow-motion collapse, and he believes it's far more dangerous than any real estate bubble. China's population, currently around 1.4 billion, is projected to shrink by an astonishing 600 million people in the next 50 to 70 years. To visualize that, imagine the entire populations of the United States, Brazil, and Japan disappearing. It's not science fiction, it's simple math. A country needs a birth rate of 2.1 children per woman just to keep its population stable. China is nowhere near that number. Estimates place the birth rate closer to 1.0 or even lower. Decades of the one-child policy, rising living costs, and a cultural shift away from large families have left China with an aging, shrinking population. And once a population starts collapsing, it becomes almost impossible to reverse. A smaller young generation means fewer workers, fewer taxpayers, and fewer families starting new households. The cycle feeds on itself, accelerating economic stagnation. Rickards compares this looming demographic collapse to the Black Death of the 14th century, which wiped out up to half of Europe's population. The difference? China's decline won't happen in a few years. It will stretch over decades, slowly eroding the country's economic engine. But this collapse doesn't stop with demographics. It's connected to a global crisis that could impact everyone watching this video, because it involves the technology inside your phone, your car, and even your refrigerator. Semiconductors, tiny chips no larger than your fingernail, are the backbone of modern life. Without them, our smartphones, electric vehicles, AI systems, and even washing machines would grind to a halt. And over 90% of the world's most advanced chips are produced by one company in one location, Taiwan. This is where geopolitics meets economics. China sees Taiwan as its territory and has made no secret of its desire to reunify the island. The United States, on the other hand, views Taiwan as critical, not just for security, but for global tech dominance. Enter the broken nest theory. This U.S. military doctrine states that if China were to invade Taiwan, Taiwan's semiconductor factories, particularly TSMC's state-of-the-art plants, would be destroyed before China could seize them. In other words, the nest would be broken so the eggs and chips could not be taken. This isn't speculation. TSMC itself has acknowledged its strategic ties to U.S. defense planners. It's why the company is investing over $10 billion in new fabrication plants in Arizona. Intel is also spending billions on chip plants in Oregon and other U.S. states. What we're witnessing is a technological decoupling, a slow but deliberate cutting off of China from the most critical supply chains of the 21st century. And this brings us directly to the next part of Rickards' warning: the rising value of gold. Jim Rickards is one of the strongest voices predicting that gold is heading for a historic rally, possibly all the way to $15,000 per ounce. History supports this. The first great bull market for gold, from 1971 to 1980, saw prices skyrocket 2,200%. The second, from 1999 to 2011, delivered a 700% gain. If gold's next cycle matches even the average of those runs, $15,000 per ounce is not just possible, it's likely. The reason is simple. When trust in paper currencies collapses, gold becomes the ultimate safe haven. Every time governments flood the economy with printed money or manipulate interest rates to dangerous levels, investors flee to gold. It's the one asset that has never gone to zero in 5,000 years. Rickards isn't making wild guesses. He's calculated the global money supply across major economies, the US, EU, China, and Japan, and divided it by the total official gold reserves. The result? A target price around $15,000 per ounce to fairly backstop the monetary system. Consider what this means. A relatively small shift of institutional wealth into gold could ignite an explosive rally, triggering one of the largest wealth transfers in modern history. If this breakdown is opening your eyes to how fragile the global financial system really is, hit like and comment below. Do you think the dollar will still dominate 10 years from now? I'd love to hear your predictions. While China is battling a real estate implosion and demographic time bomb, the United States faces its own crisis: debt and monetary policy failure. Rickards argues that the Federal Reserve is completely trapped. We saw this in late 2018, when the Fed tried to raise interest rates and scale back its balance sheet. The result? The stock market collapsed 19% in just 3 months. The Fed panicked, reversed course, and started cutting rates, long before the pandemic or 2020's economic turmoil even began. Now, the US is buried under historic debt levels. Any attempt to raise rates too quickly risks triggering a financial earthquake, shaking everything from housing markets to Wall Street. According to Rickards, the Fed has no good options left, and that sets the stage for what comes next. Jim Rickards paints a stark and unsettling picture. We're entering an era where both of the world's economic giants, the US and China, are heading toward a form of decline. China faces the crushing weight of a collapsing real estate market and a demographic spiral, while the US wrestles with historic levels of debt, relentless money printing, and financial instability. The outcome, he suggests, is nothing short of a slow-motion global reset. The dollar, which has dominated global trade and finance for nearly 80 years, is beginning to lose its grip. Nations that once relied on the dollar are quietly shifting strategies, building reserves of gold, forming alternative trade agreements, and experimenting with digital currencies to insulate themselves from Western influence. China and Russia are leading this charge, but they're not alone. Middle Eastern powers, wary of economic sanctions and inflationary pressures, are stockpiling gold at a rate not seen since the Cold War. This isn't just a financial hedge, it's a signal that the world is preparing for a new monetary order. If Rickards' prediction of $15,000 gold comes true, it won't just mean massive profits for those holding the metal. It will be a glaring warning that global faith in fiat money, the paper currencies we use every day, has crumbled. A price that high would represent a desperate scramble for stability, a world acknowledging that old systems can no longer be trusted. What happens when confidence in money erodes? Governments tighten their grip. Rickards calls the current monetary system a neo-fascist structure, relying on state power and coercion to enforce trust in the dollar. But, as history shows, people always find alternatives. Whether it's gold, cryptocurrencies, or decentralized trade systems, new forms of value will emerge when old ones fail. Rickards' message isn't about fear, it's about preparation. The next decade will challenge everything we know about wealth. Those who prepare by understanding the dynamics of gold, demographics, and technology will have a huge advantage. If you found this analysis helpful, hit subscribe for more deep dives into the economic shifts shaping our future. And comment below. What do you think is the single biggest threat to the global economy right now? I'll be reading every response.